Jim. That's Tony Romo introducing this month's edition of the best monthly dividend stocks. That's right. This one, ideally, we might hit this one up every month. We might not. I don't know. We're going to do a best monthly dividend stocks. We're going to do a best just stocks for the year 2024. That's coming up. I hope you're excited. But hey, we're starting with the dividend ones. I know you guys like to just cash a little bit of cheddar in them pockets. I do too. Not the Velveeta. That's not real. It's not real cheddar, folks. It's not real any type of cheese. But would I eat it every day if I could? I would. But we're here for that good cheddar, okay? Real dividends we get consistently. We want to make money off of it. That's why you're here. So we've got 3 of them bad boys and 1 bonus. My favorite here for this month, March 2024. Don't tell me the month's already been started for 10 days. It has been started 10 days. But hey, guess what? Deal with it. We're in the new house. There's a little bit of echo. You're going to deal with it. You can suck it if you can't. So, yeah, let's get cracking right into this. We don't want to take too much of your time. I actually do want to take every second of your time you can. Please watch as much as you can and enjoy it. First one, look, you knew it was coming. It's a stock that's criminally, in my opinion, it's at a steep discount to where it should be. And it's going to be none other than Realty Income. Okay, we know it. A company that is self-identified as the monthly dividend company. Now, it's 2024, so even a company that didn't pay a dividend at all could identify as the monthly dividend company if it wanted to. You as a human being could identify as the monthly dividend company. And that's really your prerogative. I can't judge. If I did judge, I'd probably be canceled and get in a lot of trouble. Anyways, this is a company that actually does pay monthly dividends, and that's why they've been known as that. And not only that, they've been paying that monthly dividend for a long time. We'll get to those charts and take a look there. Now, what I'm going to do with these videos too, kind of get into a brief discussion of what this business is, what they do. Might be new to some of you guys. A company of this stature, probably not, but hey, some people it might be. So Realty Income is organized as a real estate investment trust. What does this mean? Well, that's a company that owns real estate and they lease it out. So we'll get into their kind of page there. You know, it's good to go to the websites of the companies to find out what they're about. You should do it if you don't do it. Obviously, I won't get into everything, but hey, I know the company pretty well. I've been investing in it for a while, but we'll go over the cliff notes. What do I like about it right now? Hey, I look at Realty Income and I look at this share price, and lately it's been getting battered. In the last year, the stock's down 16%. Last 5 years, down 23%. But we look all time, and it's a different story. Now, this is since 1995. But hey, you can see really it just hasn't. Prior to the pandemic, it was on just a legendary run. A legendary run. Since the pandemic, though, 2020 collapse, the stock just hasn't recovered to where it needs to be. In my opinion, it's at a cheap valuation. I think it's one that you should consider picking up. Now, again, we talk about the company in here just on its first page. When you click into it, they're going to talk about themselves as the monthly dividend company. And it'll get into a little bit here too. As an S&P 500 company focused on providing stockholders with dependable monthly income. That's what they're all about. That's what they're all about. Now, how do they do it is the question. And again, I mentioned they're a real estate investment trust. So they own a a portfolio of properties, and they lease them out to different businesses. And you see here they're going to highlight it's quote-unquote high-quality businesses, conservative capital structure, making sure that they're able to sustain and pay that dividend. They've got a prudent growth strategy. Then they're, corporate responsibility. They'll get into that nonsense, which isn't really relevant for me. We don't really care about that piece of it. But we care more about, well, what do they mean by this high-quality real estate? Well, hey, let's go to that page of their portfolio. Because when you hear that, there's obviously some concern, because if you're not a diversified portfolio and one of your clients, that you're leasing out the property to, goes out of business, you're in big trouble. Now, not the story here necessarily with Realty Income. You see already they've got over 15,000 commercial properties, quite a lot. 98.6% occupancy. That's meaning properties that are currently occupied by tenants. Obviously, a really good rate there. You'd love to see that pop up, past the 99 would be fantastic. So there's no, very minimal properties that aren't being paid for right now. And here's the real kicker here. These last two bullet points are really my favorite, is this 1,300 different clients. So, and not only that, but there's 86 different industries. So some of the top ones, it's, places like LA Fitness, Walmart. I mean, they're leasing out to big companies in a variety of industries, grocery stores, as you saw, fitness centers, other, there's a ton of different diversity here, and obviously geographic diversity, as they've mentioned. I do like this page on their website. It's very nice because you can actually see like the percentage of and how many properties are in each, not only state, but they've got international expansion here too into Europe. And you can see, Texas, there's a ton there. California, quite a bit. Florida, quite a bit. Montana, they've even got 25 properties, man. Kind of nice. I'd live there one day. I really would. So that's really what Realty Income is, how they make their money. Now, we should ask why the stock kind of been in the pooper lately. Part of why, you've seen this kind of dip here was really the Spirit Realty acquisition recently. They finally closed on it this year. But there was a lot of concern with this acquisition of Spirit Realty because of some of the debts that Spirit held. And a lot of people found this as not a very lucrative deal for Realty Income. Really just one that's just expanding the portfolio and their total property base. But did it make sense, and was it a lucrative acquisition is the real question. And a lot of people said maybe not so much because they're taking on a lot of debt from Spirit. So that deal's done and over with. When I look at it, and I do, there were some high quality properties here. I think it's a good acquisition in the long run. It does hurt in the meantime, though, right? That debt does hurt in the meantime. But I'm glad they got the deal done, honestly. I think it's a sign of expansion. I think if your company that you're invested in is buying other companies, it's usually a good sign. That's my thoughts on the matter. So, yeah, that's part of why we've seen the stock take another dip recently. It looked like it was on the path to recovery, then that happened, and the whole the REIT industry just kind of hit hard right now. And I think we're in for a recovery as interest rates start to simmer a little bit. I do think we're in for a recovery in the REIT industry, which is why I'm kind of excited about it for the future. Now we look at kind of the rate, some of the statistics here. I don't know who put that there. Someone did something on the bottom of the screen. Kind of weird. Seeking Alpha, you need to quit with these pop-up ads, especially one like this, to say that I don't use creams for it. I don't have that. I promise. I'm very protective, man. I don't know why you would say that to me. So we see Realty Income with a payout ratio really just shy of 6%, so pretty good. I mean, it's not necessarily the highest dividend yield out there, but it's pretty nice. Payout ratio, pretty darn good here too. Most of these REITs will be hovering around 80% plus, so they're not in a really unhealthy spot. Once you get close to that 100% line, it gets a lot more concerning, and that's obviously for a reason that, you don't want, to pay out more in your dividend than you're making. So that's pretty obvious. I hit the glass desk with my ring, so don't mind that. Should have worn the silicone one. It's a dangerous game. Now here's where a lot of your Realty Income investors come from. 26 years of dividend growth. 26 years of paying monthly dividends and growing it. Every single quarter, they grow the dividend. And we'll see that in chart form here so you can kind of see how cool that looks. Anyways, you see the frequency monthly. Here's where it gets kind of fun when you look at this dividend history. I shouldn't have to scroll all the way up for that. This is kind of a joke. You look at the chart, and let's just pull out the max here. Get this nonsense out of here, man. And here's where you kind of get to see that picture, why people are invested in this and who really is, right? This is a lot of people seeking just additional consistent income, and it's what they're getting. Look at just how consistently, and obviously there's a little bit of a special divity there, special divity. So that's, that's okay. But they've been growing it since forever. I mean, since their history, 1994. Here you see. Look at this. Well, I guess really they've been growing it since 1998. I should say. Let's be fair. Consistent growth. And if you look in recent history, I mean, there's some times where they're growing it. It doesn't show the pennies here. I just realized sometimes they're growing it every month, not necessarily every quarter. Just by fractions of 0.2%, whatever it might be, but they're growing it. So that's where people are invested, and a lot of the people investing in this are old. I'm not old, but I still love income. So I love passive income. So sue me. What can I say? Please don't do it. And then finally, last bit is kind of just the valuation of the company. And I look at a price to book, and at a 1.3, it's actually very cheap for Realty Income. Historically, this price to book is pretty cheap. I just think the stock's at a great value. If you're looking at an entry point, it's a really good spot. My next stock here going to be Main Street Capital. A little bit different. This one, hey, we'll just get kind of cracking into what the company is first and then get into the stock movement a little more. Now, Main Street Capital is structured a little bit differently. Now, this, instead of being a real estate investment trust or REIT, is actually a BDC, or a business development company. Now, when you hear that, you might not know what that means, or you might know what it means and you're saying, shut up, you idiot, you don't need to explain this. I'm not stupid. Now, look, son, you stop talking to me like that, or we're going to have issues. So, business development company, what do? Basically, they are lending capital to companies that need loans, right? They need money for whatever reason, and for this case, it is to develop their business. Kind of self-explanatory when you think of it that way. They lend money to a company that's developing their business, so that way, they are earning a consistent interest income on their own side, right? They're giving someone the loan and getting paid interest in the meantime while they pay that back. Usually at pretty high rates based off the loans that they pay. So, you get in their About section on their website, and they go into it a little bit here. So Main Street is a principal investment firm that provides long-term debt and equity capital to lower middle market companies and debt capital to middle market companies. So you see what they're already targeting is really that lower middle market and middle market. And why is that? Well, those are the companies that are really taking on more of these loans to develop the business. So they do get into their investment philosophy here. The portfolio investments are typically made to support management buyouts, recapitalization, growth financing. Again, as we said, developing the business, refinancing, acquisition. So everything about that piece of it just goes to show that they're giving people money so they can develop their company. That's what a business development company does. So yeah, pretty interesting to see. That's kind of what the company does. What do I like about it? Hey, well, for one, obviously, there's a lot to like. I look at the stock price, and we always do that. Last year, up 16%. Performing very well over the last 5 years, even up 19%. And to boot, a 6% dividend. So we're talking about a consistent monthly dividend that's being paid out, plus a share price that's appreciating. Now, that's what we call the best of both worlds. You're getting a great income, more than a money market could get you, more than bonds, fixed income could get you. And you're also getting capital appreciation. That is the best of both worlds here. You're buying the stock for the income it produces, but you're also getting an additional benefit. So really like that about Main Street Capital. And I think they've got an avenue for growth to really, from here on out, I think there's a lot of room to grow for Main Street Capital. And, the good thing here is, unlike Realty Income, they actually have recovered and gone past their pre-pandemic levels. It's a pretty good sign of strength of the company and what they're able to do as a management team. Definitely happy to see it. So I look at Main Street Capital, And some of the valuation here, price to book of it about a 1.58. Not too bad, all things considered. Read it and weep, right down there. So not too bad, all things considered. But again, we're not buying it for the valuation. We're buying it for the dividend. And what is that? Again, a little bit over 6%. Technically only, boosting or boasting a 3 years of dividend growth. We'll show you the chart to kind of show what that looks like. Just to be honest, payout ratio is very low for the company. And again, they're just like with real estate investment trust REITs, they get special tax advantages if they keep their payout ratio. Usually it's over 80%. Or sorry, not just usually, it is. If they pay out over 80% of their income to the shareholders, they get special tax breaks, and that's typically what they abide by. Here you go here, dividend frequency monthly. In case you didn't believe me, it's real. So let's look at the chart and graph and see kind of what we're talking about. And again, here's where you can tell it's been a lot more than 3 years. They lied to me. Anyways, or I guess not. Never mind. I forgot. They kept it consistent all of 2020 to 2020, most of 2021, for the reason being the pandemic existed. But one thing I really like actually about Main Street Capital, it's not only a consistent monthly dividend they pay, but in order to maintain that payout ratio, they also pay special dividends pretty regularly. So again, you see back 2020, or I guess 2019, two different special dividends there. Even since 2021, special dividend, special dividend, special dividend. Most recently, they've been paying some really good ones. Just back in September, 28 cents. 28 cents again in December. Then here this month, 30 cents. So you're seeing they've got this extra income, and what are they going to do with it? They're going to pay it out to the shareholders. So good to see that, as well as them increasing the dividend, because again, we're talking about a payout ratio of 6%, but that's excluding the special dividends that they pay out. I like it a lot, and I really like the business model. I think they're doing great things. They're going to consistently, in my opinion, every 3 months, they're going to be paying this special dividend out of varying amounts. I think it's still going up. I think next, probably June time frame to July, we're looking at another 30 cents, but I think there's great things coming out of this company, and I'm happy to hold it. So definitely happy to see it. So that's Main Street Capital, one I like. Now we get into more of a risky one. It's worth mentioning this next one is risky, but it's for those higher yield chasers. These last two have been kind of mid-yield if we're looking at real estate investment trusts as a whole, and BDCs usually offer higher yields. Now we're going to get into a BDC that does offer a higher yield. It's going to be Prospect Capital. I have my own personal example of this one and how it's benefited me. Now, Prospect Capital, what are they? Again, they are a business development company yet again, and they are a leading provider of private debt and private equity to middle market companies in the U.S., with a focus on sponsor-backed transactions and direct lending to established owner-operated companies. So again, it's a similar business model, but a little bit different here, right? Just a little bit different. And here you go again, too. So they've decided to be elected. They've elected to be treated as a business development company, as you can see there. So they're primarily, and this is really, they're giving these loans out, like I mentioned before, invest in first lien and second lien senior loans and mezzanine debt, which can include equity component on occasion. So it can include equity, so it's not really strict to just that debt or capital piece of it. They provide that capital or loans to middle market companies and private equity financial sponsors for refinancing, leverage buyouts, acquisitions, or recapitalization. Okay, it's the exact same thing. The business model is very similar. They're giving out loans to companies that are developing. Makes sense. Now you know what it is. Now, why do I say there's some risk involved with Prospect Capital? You look at the stock chart and it's not beautiful, right? It's just not pretty. Over the last year, down 22%. Over the last 5 years, down 17%. The lifetime of the stock, it's down 30%, right? This one's been really pooping the bed since 2008, if we're being honest. Since the financial crisis, they've been pooping the bed. Now, we did see some recovery really post-pandemic a really good recovery, about 100% on the stock price. Stock reached $8 at one point. I was riding high because obviously I hold this one. But since then, it's been going consistently down to where it's near its all-time low. All-time low, you're looking around $4.20. We're at $5.40. Here's why I kind of like the stock right now. Well, hey, I think it's at a decent point based off of the stock history. I think it does bottom out, around that $5 range, right? I think it's still a good price as is, and I think there's room to grow. Now, I think where does the stock go? For the future, I don't think there's much share price appreciation. But where you are investing in Prospect Capital, you're getting a massive 13% yield if the stock hovers around $6. And I think that's where it does hover. So there's a tiny capital appreciation piece at this point, in my opinion. If you buy it at these levels, I think it comes back to 6 towards the middle of the year. We'll leave it at that. So again, let's talk about the yield and why you do it, because people buy this one for the high yield. Again, no growth to be had. 13% yield, pretty nice. Payout ratio is not too much. It's not too crazy actually, which is good. Now look at the dividend history, and we look at the chart, and I look at the last 5 years, and hey, that's pretty interesting. Every single month they pay 6 cents. I mean, it's kind of cool, consistent but never changing. We'd like to see that, but then we go back to 10 years and we see this is actually a company that has cut its dividend historically in a time in which the market was having an incredible bull run. This company actually, they cut their dividend, but since 2017 have kept this 6-cent dividend. Now, what do I think about this? I think it's going to stay 6 cents for a long time. I don't think it's going to be I don't think they're going to raise it. I don't think they're going to cut the dividend at this point. I think they make plenty of cash to support the dividend at these levels, and I don't think they're going to risk raising it. Now, could they raise it? They could. They could. Look, you look at it, really their quarterly FFO and their earnings. I think last quarter was about 21 cents. And they're paying out 18 cents. So again, they're straddling the line, but obviously I don't think you can afford to raise it. If you raise it even 1 cent, then you got to make 21 cents every single quarter. So I don't think it's worth it. I think they're at a good level. This 13% payout is 30% dividends, very high, but again, it does benefit the investor quite a bit. Now again, there's more risk involved because things could go wrong, especially when you're loaning to these lower to middle market companies. These companies could go out of business, and obviously that hurts Prospect Capital because they may not get the loan repayment or some of that interest income too. So that's worth mentioning. Now, I bring it because obviously I own it, and I enjoy really that the reinvestment, the dividend reinvestment in every single month. Because look at this, every single month with Prospect Capital, off of my 300 share position, I'm getting 3 shares every single month, and obviously that increases not only as the share price goes down, but as we acquire more shares and it pays 6 cents, we get more and more shares every single month. So it's a real snowball winner with that big yield. It's a hefty yield, and if the share price goes up, obviously I'll be benefiting quite a bit at the current levels. Here's our bonus, and it's not a monthly payer. I'm sorry guys, but it kind of is. It's weird, okay? It's not a monthly payer because it definitely only pays quarterly, but it pays specials all the time. So that's why I say I like it anyways. It's got to be mentioned in this one because I'm a huge fan of the stock right now. And that's going to be Hercules Capital. Now, we look at Hercules Capital, and again, we started with the about. And what is it? It's another business development company, guys. I did it again. I did another business development company. So, anyways, here they mention it. So, enterprise value exceeding $4 billion, market capitalization over $4 billion. So, you look at it, it's not necessarily a massive company here. Pretty small market cap at $2.8 billion. It's a small company, all things considered. But hey, what does it do? Well, it's a business development company. You already know exactly what they do. So here they talk about really that capital commitments here. So they've approximately $19 billion of capital commitments made to over 640 emerging growth companies since inception. So they're obviously, yet again, loaning out money to companies developing their businesses. It's another company that's very similar in that aspect. Here they talk about what is venture debt. So venture debt, because they do venture lending a little bit different than your traditional kind of what we talked about before. Now, this venture debt here, as mentioned here, is a type of alternative debt financing to traditional commercial banks and offers the ability to customize financing needs to meet your specific company requirements without commercial bank regulatory mandates, restricted cash deposits, or covenant packages. So, again, this is why these companies developing would utilize this, is the fact that it can be a flexible plan, a flexible loan instead of just your traditional bank loan. So good in that aspect, for sure. Now the stock, I love this stock for really the share price has been phenomenal, right? I look over the last 5 years, it's been a business development company that's been absolutely banging. 47% up in the last 5 years. I look all-time max, which is really since 2005, since before the financial crisis, which it got hammered, and it's still at 43%, right? The share price has held up very, very well over the long term, and so is the dividend. So that's what people are here for. What are we going to talk about? Let's talk about the dividend. Price to book, 1.5. Just wanted to throw it in there. So that yield here on Hercules Capital, with the stock going up, has lowered it a little bit. Typically, you're seeing around 10%. They are going to give us an 8.8% right now on this one with quote-unquote 0 years of dividend growth, but a 5-year dividend growth rate of 5.1%. Payout ratio under 80%. Does pay quarterly, okay? But here's where I get a little excited. We look at the actual dividends and look at the history of it, and we see a different story. Safety, I didn't fart. You did, bro. I don't know what you're talking about. So for some reason, I just wanted to show you this because Seeking Alpha isn't always accurate, and it annoys me. This is not right at all. This chart here is just wrong. But you know what is right? Let's go to NASDAQ's website. If you're looking at dividend history, always go to NASDAQ. I just like Seeking Alpha because the chart's kind of nice, but NASDAQ has incredibly accurate information here. What do I love about Hercules Capital? Well, that 8.8% is really talking about what's it talking about? The normal dividend, which is this 40-cent payer. But every time they pay out, they've been paying a special dividend of varying amounts. Lately, it's been 8 cents. Previously, it was 15 cents. So we're talking about it's 48 cents. It's not 40 cents. It's 48 cents. You look prior to that, 39 cents plus 15 cents because they had extra cash that quarter. 7 cents before that. 2 cents before that. They're a company committed to paying out what they need to the shareholders, which is great. So they're going to pay a consistent quarterly dividend that, in all honesty, has been growing for, really since 2017 here. You see it went from 32 to 33 to 39 to 40. So the dividend's been growing, and they've also been paying an additional special dividend on top of it. Sug on D's. That's why I like Hercules Capital, folks. I think it's a good point to buy in. I like the stock. I'm already up big on the stock, both capital appreciation wise and the dividend, but I still like the stock. That's your best monthly dividend stocks. I'm gonna go drink a lot of water. I'm struggling here. You guys are fantastic. Bye. I hit the wrong button. Did you hit? I did it. I hit the wrong button.